Hey everyone, in this video, I'm going to bring you one artificial intelligence AI stock that's down 66% off a high that I think makes an excellent investment for 2024 and beyond. So I'm going to look at this stock. I'm going to look at its critical financial metrics. I'm also going to elaborate on the unique business model this company has. I think you're going to want to understand how this company operates and how it accounts for the cash that comes in. And then I'm going to look at the valuation and the prospects over the next 2 years. And finally, tell you why I like this stock so much as a buy. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the stock that I'm talking about that's down so much off its high that I think makes an excellent stock to buy is Roblox. Now I know what you're thinking. You're saying, hey, wait a minute, Roblox is not an AI stock, it's a metaverse stock. Well, it's both, right? It's metaverse and it's AI. The company's using AI, integrating AI into its business. That's making it easier, more efficient and effective for developers to develop games and products and things on the platform that users engage with. So AI is definitely helping the company. It's definitely using AI to make the company more profitable, more engaging. And so you can call it an AI, you can call it a metaverse stock, whichever you prefer. Now, I told you I was going to discuss the unique nature of this business, and here's that explanation. This is straight from management, right? So this is how they account for money that comes on to the platform. Now, it would be easy if the company just said, okay, $30 comes in, that's $30 in revenue, right? That would be simple, but they don't like to do things simple. The US accounting code doesn't want to be simple, it wants to be complicated. So here we are. So here's how Roblox accounts for a customer deposit of $30. So let's say somebody gets $30 and puts it on the Roblox platform. Well, that's not $30 in revenue. Roblox accounts for that as bookings equals $30. So it's initially recognized as bookings. And then durable virtual items are accounted for as $28. And then consumable virtual items are recognized as $2. So in the first month, revenue recognized is only $2. And then the company prorates the remaining $28 over 28 months. So it recognizes $1 per month. So out of that $30, only roughly $3 will be recognized as revenue in the first month. And then the other $1 per month will be recognized as revenue over a 28-month period. Now, the reason Roblox says they do it like this is because that's the average life of a customer on Roblox. And so they spread it out as though this customer is going to use this $30 over the next 28 months. Now, that's surprising for me to hear because when my son gets $30 on the Roblox platform, it definitely does not last 28 months. So kudos to those individuals who are making $30 last 30 months. Okay, so since Roblox accounts for the money coming in that fashion, then bookings becomes a more important metric to look at than revenue, right? Revenue is sort of a lagging indicator of the business. Revenue is telling you the money that came in perhaps 2 years ago or a year ago, right? Bookings tells you the revenue that's going to come in over the next few years on the Roblox platform. And here's the surprising trend that happened with Roblox. So I think we're all aware that Roblox business absolutely boomed during the pandemic when kids were at home from school and extracurricular activities were canceled. And so parents would prefer that kids play with each other over the metaverse, over the computer, over the iPad, instead of coming together in person when the COVID-19 pandemic was in full effect. And so Roblox benefited tremendously. And then when economies reopened, the fear was that there would be a significant pullback on the Roblox platform. It would lose players, it would lose revenue, it would lose bookings, and that was true to some degree, but not as severe as was initially expected. right? Look here, the trend going back to the third quarter of 2020. You can see bookings growth 200%, 172%, 161%. These were unrealistically strong numbers because of the pandemic, right? And then it came back down to reality. 35%, 28%, 20%. And then as economies started reopening is when you started to see the negatives. Negative 3% in the first quarter of 2022, negative 4% in the second quarter of 2022, but then a surprise. In the third quarter of 2022, 10% growth in bookings. In the fourth quarter, 17%. In the first quarter, 2023, 23%, 22%, 20%. So the company just returned to growth, right? After a brief slowdown, a brief decline, it just returned right back to growth trajectory. And that surprised a lot of investors, myself included. I thought there would be a bigger pullback on the platform that didn't materialize. And so now I see that as a good thing. I see that as a strong indicator that the company has an attractive value proposition that keeps players engaged and wants them to keep coming back, even though people have other options now that economies have reopened. Roblox has sustained and even grown despite that fact. And you can see that in its daily active users, right? In the third quarter of 2020, daily active users jumped to 36.2 million, which was a 97% increase year over year. They nearly doubled their user count in 2020. And again, we thought that they were going to lose users as economies reopened, but they never did. They settled down into a more realistic growth rate, growing roughly 29, 20, 28, 30% over the last several quarters, and they've now grown to reach 70.2 million daily active users, which is significantly higher than even at the peak of the pandemic when they had 40, 42 million daily active users. So they've really proven themselves as an attractive option for individuals looking for entertainment online. Roblox is a go-to destination that has remained popular. Longer term, you can see their revenue has grown as well as bookings. Those bookings have turned into revenue from 700 million in 2021 all the way up to 2.6 billion. So you could see that coming into fruition. You can see those bookings turning into revenue, because very rarely do people on the Roblox platform ask for their money back. Once you make a deposit, it's there. You just slowly use it and it gets consumed and it turns into revenue. The only time it would not turn into revenue is if customers say, give us the money back. We want to take our deposit back, which rarely happens on the platform. Now, Roblox does not report that, but that's my speculation. It's not a thing where, if you put money on there, you put it there for a reason. You don't want to get it back. And so cash flow from operations looks strong for Roblox, even though I'm going to show you later profitability does not. So cash flow from operations, strong. This is a quarterly cash flow from operations chart here. And it's a seasonal business, right? The holiday season right now, people are buying a lot of gift cards for Christmas, for the holidays as gifts. Roblox gift cards are very popular. And so it is experienced a boom during the holiday time and then regular spending during other quarters. 112 million in cash flow from operations in the most recent quarter, several quarters above 150 million. The point is they're solidly cash flow positive. They're self-funding, even though you see those excellent growth numbers in user count and bookings count. They're doing that while also generating positive cash flow from operations. That's impressive. So I mentioned that their operating income is still negative 300 million. And that's primarily due to two factors. Number one, because of the way they account for the money that comes in. I showed you that, if they get $30, they're only accounting for $3 as revenue and the rest, over 28 months. And so that makes its income statement look much worse than the reality of the business, which is money is coming in. Right, so that's why one reason why the operating income is how it is. And also the company uses a significant amount of stock-based compensation, which is a non-cash expense. Let's look at that. So I'll show you that in the next slide. In this one, let's look at its balance sheet. It has $2.1 billion in cash and short-term investments and $1 billion in long-term debt. That's a solid balance sheet. It can use the cash to pay off the long-term debt, and it'll still have over $1 billion in cash. I don't suspect Roblox will need to go to shareholders to ask for any more money unless there's some major growth opportunity where it needs to raise money. I don't see that happening. I think most of the investment has been done in the business and it's cash flow positive. So I don't suspect them doing that. Now, they will dilute shareholders because they will be paying stock-based compensation, but I don't think they'll be selling more shares in the market. So Roblox is not a cheap stock. It's trading at a forward price to sales of 7.282, but that's roughly the cheapest you've been able to buy this stock going back all the way to July 2021. Given that the company has proven itself in sustaining customer engagement, given the lucrative cash flow business model, right? I haven't mentioned yet, but those developers that create the games on the Roblox platform, that is an outsourced activity. Roblox does not pay developers in-house. That's outsourced. So those developers create games for the Roblox platform, and they only make money if those games make money. And Roblox pays them after those games make money. So it's a de-risked business. Roblox is not paying developers all this salary to try and create things that might work or might not. It just outsources. It says, hey, we'll let you all create these things, and if they work, we'll pay you. If not, then you don't get paid. And so in that way, the business is a little bit de-risked, right? Because developers only make money if their creations make money, and they only get a fraction of the revenue the creation generates. I like that business model. It's similar to a platform business model that similar to like an eBay, where they have the platform and they bring together buyers and sellers and they take a fee for each transaction. It's not exactly like that. Roblox is more heavier in the investments in technology, but it's similar. It has the characteristics of that, and it's proven to be lucrative in terms of the cash flow from operations. And so I like the similarities there. And so for all of those reasons, I'm willing to pay this premium valuation for Roblox stock, and I think it makes an excellent investment for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.